How's it going, everyone, and welcome back to another video on the channel. Now today I'm going to be talking about something that I use all the time, and that is structure. And I'm going to be showing you which highs and lows to use, why you should use certain highs and lows, and ultimately how to read direction in a proficient, if that's a word, and more effective way. So if you feel like you're always on the wrong side of the market, or you feel like you can never get the direction right, hopefully this video will help you, because as I said, structure is the #1 thing in trading. And if you want to learn more about my strategy and how I trade, there's a link to my Telegram in the description. Feel free to check that out. And lastly, we have our good friend back. Told you he'd be making returns soon, and the background has changed again, so that's always a positive. It wouldn't be a video from Oscar Forex if the background didn't change, but nevertheless, don't forget to subscribe, hit the like button. We're going to jump over to the charts and show you what's cooking. Okay, so as you can see, I've pulled up GBP USD, of course, my bread and butter. Now I want to talk to you about highs and lows, how to read them, and how I read them in the most sort of effective way, so to speak. So firstly, if we just look at today, right, do you see a trend here? If you think yes, then you would be wrong, because maybe on the 1 minute there might be some sort of, bullish trend, but on the 15-minute, what do we see? We have a high, we have a low, we have a high, and we have a low. And what do you notice about these highs and lows? Price cannot break out of any of these highs or lows. So we are quite literally going sideways or consolidating. So just using these highs and lows, we know there is no trending trade to take today, right? So let's, go to a different example of structure that we can actually use. So let's take a look at maybe like this structure here. How do we read it? Well, what do we see? We have a low here, right? And this is low because it pushed up and broke these highs. So this is like a strong low, or like a major low, if you want to call it that. And then we had this high cause a push down below these lows, and it broke down and it created this new low. So what does that mean? Well, because this high here caused a break of a strong low, and again it's a strong low because it broke a previous high and broke structure to the upside, but then got broken again. So this now becomes our strong high. And what does price do? It comes up, it wicks into this high, and then it fails to break it. So just from looking at that alone, we know that price will most likely continue to sell when we're at this point, because some people might look at this and go, oh, it's broken structure, but it hasn't, because what has it failed to do? Break the actual high that caused a push down and break of this low. And so when that happens, all we can do is, if I exit replay, is we can expect price to sell, and that's exactly what it does. And then what does it do? This low that failed to break this high, so basically this is the new lower low, gets broken, and we continue downwards. So that's another example there of which highs and lows to use. I'm going to just keep rinsing examples to show you what I mean, because again, it's important. So same again over here. What can we see? If we're looking at this, we're trending upwards in this area here. But what happens? Well, we have a high, we have a low that closes lower than this high. Oh, sorry, higher than this high. Push up and we break this high. So what happens? This becomes our strong low because it's pushing to the upside, it's broken the previous higher high that broke this high. So this becomes our strong low. But then what happens? We get a push to the downside that breaks this low. Although it technically continues down to here, technically the leg here ends here. But either way, we break the strong low. Then price comes up, and what happens? We fail to break the major high, and then as you can see, come down again. And some people might look at this as, oh, it's gonna go bullish, but no, because what you fail to realize is we can't break the major high, and we've just broken a major low, and we formed a new sort of lower low. Came up, failed to break that high here, push down, creating the start of the rollover, push up, failed to break this high, and then we collapse downwards. So the point I'm getting at here is, don't get, if you notice, I'm not getting caught up in like, if I get rid of all of this, I'm not getting caught up in these tiny highs here, or these highs here, or this tiny high here, or this here. All I'm focusing on is the key swing points, or whatever you want to call it, of true structure, true highs and true lows, because it's better to worry about these areas here and actually get structure right than to worry about this high, 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 this high. You want to just focus on the major stuff, because it will then make it so much more simpler. You won't get caught up in structure, which is very easy to do. It's something that a lot of people do. And it's the same again over here. You can see we have this strong area here, push up, but if I draw the line across, what do we see? Break this high, retest into it, okay, cool. And then we push up, come back in, retest into it, and then we push up and break these highs here. Now, you can look at it a few ways, and that's the beautiful thing about structure. There's not one correct way. You could view this area here as the low, as one push up, or you could view this area as the low, as it sort of pulled back, tapped again, filled, and then pushed up and broke out. But either way, what you will see is we then have these highs here, push down, we break out of these sort of strong lows, push up, fail to break the high, push down, break the low again. And at this point, when we get the break of this low here, that is the point that I start to look for sells, because what could happen here is, if you try and preempt it, if you zoom right out, this low here could literally just be a continuation to the upside. So that's why you need to wait for a failure to break the highs as well, and a break of that low, because otherwise you're just going to end up getting caught in a same direction trend, or trying to catch, silly reversals. So I always wait for, in a sell, condition, I always wait for failure to break high, low gets broken, and then we look to sell. And obviously, if I show you a buy example, it would be similar, where we've got a low, push up, high, low, and this high obviously caused the break of this low that was caused by this sort of major push down here. And then we get a huge push up, break above it, retest in, and we go. So it's the same thing, just reverse basically for buys. It kind of just gives you an idea of what you can expect. Even if you could somehow trade this, I'm not sure how you would, because it'd be at midnight. But again, you have push up, high, pulled back, low, push up that broke the high. This becomes a strong low, push down, break the low, and then price fails to break and continues. So same thing, rinse and repeat. Although, it might seem a little bit complicated sometimes, it can be very useful to use. And hopefully I've explained it in a way that makes it, understandable. But hopefully you guys found that useful. If you did, don't forget to hit the like button, and I will see you in the next video.